Hello and welcome to my free day trading educational course. I want to thank you so much for giving me the opportunity to share my experiences and knowledge with you so that you may find success trading stocks such as I have. Day trading has really opened many doors of opportunity for me. I'm able to make a full-time living just trading a few short hours a day. I'm not tied down to one location as I can trade from anywhere in the world. I'm able to use my profits to venture out into other investment opportunities such as real estate or mutual funds. Day trading is a lot of fun, and it has given me a life that is less stressful and filled with excitement. And a big part of that excitement is teaching others how to trade. I've always loved teaching. I've always loved sharing what I've learned with others so that it may help them in some way as it helped myself. I can't express the feeling you get knowing that what you have said to a person changes their life somehow. Day trading has changed my life, and if this is something you truly want to do, then I would love nothing more than to help. This course is a foundations course. Think of it as a building being built, and this is the concrete slab. Without this, the building is not going to be very stable, right? So no matter if you are a complete beginner or an experienced trader who may be struggling, this course is designed to help. So I suggest that you go through each and every lesson in order because they do build on each other. And I give some tips you may find helpful throughout the lesson. So I'll go over all the basics of trading, such as placing orders, how to read charts, how to find the best stocks for trading, how to read level 2, when to buy, when to sell, how to manage your risk, and at the very end, I'll show you one of my most successful technical strategies that will kind of tie everything together so that you can get started. Now, if you have any questions, please feel free to comment or reach out to me. So let's get started, and I hope you enjoy. Anyone can trade stocks. You don't have to obtain a license or pass a background check or have a college degree. The only requirements is that you have access to a computer and internet. You also need to be available just a few short hours a day to trade with no distractions. You need to have money to be able to purchase stocks, and you need to be able to open an account with an online broker. Opening an account with an online broker is much like opening an online bank account. You'll fill out an application to open the account, then deposit money into the account, and once your account is funded, your broker will provide you with special software to download on your computer so that you are able to actually buy and sell stocks. Now, this software differs from broker to broker, but many are highly customizable that come with tons of features such as charts, market scanners, order books, direct routing, hotkeys, and much more. So once you log into this software, you are able to choose which stocks you want to trade by typing in the stock symbol. The symbol is an abbreviated form of that company. Apple's symbol is AAPL, Facebook's symbol is FB, Ford's symbol is F. All publicly traded stocks are assigned an abbreviated symbol, and that is what you'll use to research and identify stocks. So once you type in the symbol, you'll be able to choose how many shares you want to purchase and how much you want to buy and sell them for. All the decisions are up to you. There is no middleman or advisor you have to go through to buy or sell. You simply just click the buy button and your order may be executed instantly. If the price goes up and you decide to sell, you click the sell button and you just made yourself money with just a few clicks. Now, the money you made will take a day or two to clear, but once it's cleared, it will go into your broker account balance where you are freely able to transfer from your broker to your personal bank accounts and then use the money for whatever you want. You can pay your bills, go out to eat, save for a new car, whatever. Sounds easy, right? Well, sorta. It's really easy to get started, but the very first thing you need, also the most important, is to get educated on how to successfully trade while managing your risk. Trading stocks is extremely risky without the proper knowledge, and this is why most people fail. They start trading with real money, trying to figure it out as they go, and before they can figure it out, they lose all their money and end up quitting. So before even thinking about opening an account with an online broker, you need to educate yourself and practice using a simulated trading account before diving in and using your own money. Now, using a simulator may seem like a waste of time at some points because it's extremely easy to feel like you're missing out on opportunities if you would just use your own money. I have experienced this feeling firsthand, and I see many other traders do the same thing. New traders try the simulator for a few weeks, and then they say, oh man, I made 10% in my first few weeks ever trading. I think I got this. This is easy. Now, if I just would have used all my money or used my own money, I could have bought a new PlayStation or made a car payment or whatever. So they ditch the simulator, open a live account with their own money. Then a few months later, they quit because it turns out that it's a lot harder than they thought. I promise you, you will lose all your money if you don't get the education and experience first. The education only takes a few weeks to grasp, but it's the experience and mindset that takes a very long time to develop. And this is why I have dedicated my time to really focus on teaching the psychology aspect of trading. I've made every mistake in the book and have firsthand experience of what difficulties you may go through. Everybody these days wants to profit right away. They want results the fastest way possible. You have to look at day trading as a marathon, not a sprint, because rushing the process is a direct path to failure. It's better to spend the time and invest in yourself to learn and practice the skills before using real money. It's going to take some short-term pain, but I promise you it's going to result in long-term gain. Because once you've mastered the skills, day trading will give you the freedom to work from anywhere in the world, allowing you to quit the 9-to-5 job. You can spend more time with your family. You can lay around on the couch all day if you wanted. You'll be able to do whatever you want because day trading only takes an hour or two of your time a day to make a full-time living off of. So don't set yourself up for failure right off the bat. Embrace the process and learn the strategies. Once you've practiced the strategies, slowly ease yourself into a live trading account so that you can start working on the emotional aspect of day trading, which takes time. The best time to day trade is when stocks are most volatile and when stocks are most liquid. This time is from market open to about 2 hours in. The market opens every weekday except for major holidays from 9:30 a.m. Eastern Standard Time to 4 o'clock p.m. Eastern Standard Time. So the best time to trade is from 9:30 a.m. to 11:30 a.m. Eastern Standard. So depending on where you live, check the times in which you need to be able to trade and dedicate those few short hours for yourself with no distractions. Now, you can still trade anytime the market is open, but you just need to be aware that market conditions after this 2-hour window start to become very difficult. So every morning, I'm sitting down at my computer around 9:15 a.m., making sure I have no distractions for the next few hours, and by 10:30 or 11, I'm done trading, in which I go out and then enjoy the rest of my day. Day trading also has extended hours, which occur for a few hours before and after the normal market hours. I would strongly suggest that you do not trade during these hours because the trading environment in pre-market and post-market hours is extremely risky. There's less liquidity, there's less volume, there's more volatility. It can be really dangerous for a beginner trader. So unless if you get that experience and you know what you're doing, you got the education, I would avoid trading pre-market and post-market. Day trading is where you buy and sell stocks within the same day on the basis of small short-term price movement. Trades can last for a few seconds to a few hours, but positions are always closed before the market closes. Our job is to look for high probable opportunities from stocks with high volatility. So we can buy a stock, wait for it to rise, and then quickly sell and cash in the profits. An example would be a trader buys 1,000 shares of a stock at 9:45 a.m. with the anticipation the stock price will rise. 2 minutes later, the stock rises 20 cents, and the trader decides to sell the full position. They just made $200 in 2 minutes. They can choose to do this as many times as they want during one day, given two things. The market provides them with the opportunities that fit along the trader's strategy and that they pass the PDT rule regulation. PDT stands for Pattern Day Trader, and the governing bodies that make the rules and regulations for trading stocks say that anyone who has a total account balance of less than $25,000 is only able to make 3 day trades in a 5 rolling day period. A day trade is where you buy shares of a stock on one day and then sell those shares on the very same day. For example, if you wanted to buy shares of Apple and then turn around 10 minutes later and sell those same shares, then that would count as one day trade. And you're only able to do that 3 times within a 5 business day period. If you go over the 3-day trade limit, you will be restricted from day trading for 90 days. But if your account is over $25,000, then you can make as many day trades as you want. So you can see that if you have a small account below $25,000, then you're limited to the number of trades you can make. And if you're thinking that's going to cause you to make very little money, well, you're wrong. Being able to make unlimited day trades is nice, but it doesn't necessarily mean you'll make more money. There are only 1 or 2 extremely high quality trade patterns that present themselves every day, so it's common to only be making 1 or 2 trades per day anyways. You want to be only trading the best setups. This may seem very frustrating at first because when you are looking at charts, combing through 10 plus different stocks, you'll see opportunities everywhere. That is hindsight playing tricks on you, which lure inexperienced traders to start taking every possibility they see, which is why most day traders fail. By staying patient and only waiting for high quality setups, you are increasing your chance of making a winning trade while also reducing the risk of losing big if the trade doesn't work out. It's hard to stay patient as a beginner, and it takes time to practice, which is why the PDT rule exists. So the governing bodies feel that if you start out learning patience by only looking for 3 perfect day trades per week, then you'll develop the discipline needed to day trade successfully. But the PDT rule only really matters if you start trading with real money off the bat. Now, if you were listening, you should not be using real money to learn how to trade. You should be using a stock simulator with fake money to practice strategies you learn. Once you have mastered the skills inside the simulator, you'll be able to open an account with a broker that bypasses the PDT rule if you don't have over $25,000. So let's say that you get the education, you practice inside the simulator for a few months, and you're consistent inside the simulator. How much money can you start out with when going live? You can start out with as little as you want, but be aware of the minimum account balance required by the broker of your choosing. If you are a United States resident and you don't have $25,000 but you still want to make unlimited day trades, there are legitimate brokers located outside of the United States that still abide by the US market rules and regulations, except they don't have to follow the PDT rule regulations. So that is an option for those of you that want to make unlimited day trades but have little money. And if you go that route, I suggest you start out with at least $1,000. It's very possible to make a decent amount of money with only $1,000. The type of stocks we are going to be trading are breakout stocks, and these stocks can sometimes make 20 to 300% gains in one day. And there's at least one stock that makes a move like this almost every day. These types of stocks range from $2 to $10. So if you had a $1,000 account and you were about to purchase a $5 stock, you're able to buy 200 shares of that stock. If the stock rose to $5.50 a few minutes later and you sold, you just made $100 in a few minutes. So how would an extra $100 a day change your life? Or even an extra $20 a day? An extra $20 a day would be an extra $400 a month, and it would only take $1,000 to do it. Obviously, the more money you have, the more money you will make, but when first going live, my recommendation is you start very small. By doing this, you will be starting off slow and getting the feel for trading with real money, because it is a completely different experience when using real money compared to using fake money in the simulator. And it's going to take time to develop the mental mindset needed when using your own money. A share is a fractional piece of ownership of that company. When a company has an initial public offering, or in other words, it's first listed on the stock exchange market, they release a certain number of shares out into the market to be traded. A company can choose to release 1 million shares or 5 billion shares or even 200,000 shares. It's whatever they choose, but these are the only shares available to be publicly traded. This is the supply. When a company does well or poorly, this causes the demand for those shares to either go up or down, which in turn causes the stock price to go up or down. As day traders, we are looking for stocks that are high in demand and try to buy the stock before the price rises and then sell once it does. We are able to make high probability guesses at which moment the stock is likely to go up by analyzing charts. I want to emphasize here that there is no way to predict what the market will do with 100% certainty. But what we do know is that regular patterns occur in the market over and over and over that produce similar results. The reason these regular patterns occur is because the market is ran by human emotions, and human emotions are predictable. Even if most trading these days are done by algorithms, those algorithms are still programmed by humans. The entire market is just one big human psychology melting pot. The reason stocks go up is because of greed and optimism. The reason stocks go down is because of fear and doubt. Being a successful day trader isn't just about timing the market correctly. You have to kind of play the role of a psychologist as well. You need to constantly be analyzing the emotions of the market as well as analyzing your own emotions. We do this by analyzing charts. Day traders only trade based off of charts. We don't care about how good a company is, how much money they make, or how much debt they are in. Heck, almost every stock I trade, I don't even know the company name or what they even do because none of that matters. We are only trading based off charts, and we only plan on holding the stock for a few minutes anyway, so this isn't a long-term decision. We are just trying to capture the momentum. So when we are looking at charts, we are determining at which prices there will be more buying and at which prices there will be more selling. If we can assume that there will be lots of buying when the stock forms a certain pattern, then we will be one of those buyers and then ride the momentum up and sell once the momentum is gone. Day trading can be very lucrative because you can make money no matter what the overall market is doing. Now, because day traders are only buying and holding stocks for a few seconds to a few minutes, day trading is not susceptible to outside influences that make the overall market decline, such as the economy or politics, or interest rates, or world events, or foreign trade. No matter if the market is tanking or going sideways, we can always profit because there will always be a company releasing good news that will draw the interest of other day traders and investors that push the stock price up, even if it's just for a little while. This news can be a good earnings report or a positive drug study or a company merger. News is what creates optimism, and there will always be companies making headlines no matter what direction the overall market is in. The beauty of day trading is that we can make money if a stock is going up or if a stock is going down. When we buy a stock with the anticipation of the stock price rising, this is what we call going long or taking a long position. This is the most common way to make money trading. But for most beginners, it's commonly unknown that you can make money when the stock price goes down. This is called shorting. Shorting is where you borrow shares to sell first with the anticipation the price will go down, and then you buy back the shares at a lower price and then you return them. Now, I'm going to save the details of how shorting works for another lesson, but in a nutshell, shorting is the exact opposite of taking long trades. Instead of hitting the buy button to enter a position and then hitting the sell button to exit the position, shorting requires you to hit the sell button first to enter a position and then you exit by hitting the buy button. If the concept of shorting confuses you, don't worry. For the remainder of the course, we will only be discussing strategies to the long side. I never take short trades, and I do this for two reasons. Number one, not all stocks are shortable, which limits my opportunities. And number two, trading in both directions, long and short, can be really confusing at times. It can lead you to get whipsawed and twisted up, and you'll be in a long trade when you meant to be in a short trade and vice versa. It can really be confusing. So by only focusing on one direction, you'll be more focused on quality trades. So when stocks are going up, you'll often hear it be referred to as bullish. When stocks are going down, we use the term bearish. A good way to remember these terms is to think of how each animal attacks. Bulls attack with their horns pulling their heads up as they're ramming into their target, and bears attack with their claws ripping down with their arms. You may have heard plenty of times that day trading is risky, or it's gambling, or it doesn't work. It very much can be all of those things if you choose them to be. 90% of people who try at day trading fail. So, statistically speaking, the odds are greatly against you. Now, don't let this discourage you because the fact that they fail is a choice. It's not because day trading is hard or the market is rigged or unpredictable or that the 10% of people that succeed are smart. It's because almost everyone unknowingly starts out with a mindset that has likely sealed their fate to fail, myself included. We can't help but trade with this type of mindset because it has more to do with human psychology than anything else. It's just how our brains are wired. This automatic mindset causes us to do three detrimental things. Number one, focus on the reward. Number two, try to predict the market. And number three, let emotions such as fear control our decisions. These are the three actions that cause traders to fail, and most of the time, traders don't even realize they are choosing to take these actions. We think we are making rational decisions, but in reality, we are making emotional decisions. Like most traders, I was like this for a very long time, and it wasn't until I changed my mindset about trading that I started to become a consistent and profitable trader. You are 100% responsible for your success or failure. The market has nothing to do with it. You have to realize that the market is unpredictable and that there is no way to predict whether your trade will make you money or not. That's why putting the focus more on risk will save you from the unknown. Even though the market is unpredictable, we can still put the odds slightly in our favor by trading the similar patterns that the market produces over and over. Having the right attitude and developing self-discipline is going to help you succeed. Now, this does take a little while to master, which is why 90% of people that try end up going broke or giving up before ever reaching this point. So by understanding why it is that traders fail, and the sooner you start incorporating the best practices in your trading, especially as a beginner, the more likely you'll succeed. Now, this course is an introductory course designed to teach you the foundations of what I do as a trader. This course will get you started, but there is much more to learn after you have completed the course. I hope you all learned something. Thank you so much for watching.